Hey everybody, today is August 23rd, and today we're going to look at the price of Bitcoin. Bitcoin finally breaking $50,000 for the first time in many months, and yeah, it's very exciting to see the price of Bitcoin continue up higher. But let's see if Bitcoin can make a run for all-time highs, or if this is going to be something that's just going to roll over and continue sideways, or perhaps become a bull trap that will continue down lower. Before we begin, please read the disclaimer, and you can pause this video as you read it. Okay, so in my last video, I talked about how I wanted to see Bitcoin kind of break through this resistance level. We have two resistance levels. We have this blue line, which is the 200-day simple moving average. And this is important because in our past bull run in 2017, right, which actually started in 2015. So if we zoom out and we look, we can see, zoom out a little bit more, that this blue line, the 200-day moving average, is served as a really important long-term support level, right? Bitcoin's price held up above that line throughout the entire rally from late 2015 all the way up to the end of 2017, right? In fact, we only dipped below it once here, but we didn't close below it. So what really worried me this year was that when we had this correction of 55% starting in April all the way down to July, we basically we broke below the 200-day moving average, right? Our long-term moving average. And we stayed below it for several months. And that really worried me because the longer we stayed below it, the higher the probability that Bitcoin would have entered a bear market, right? And look what happened here. I mean, this had all the makings of a descending triangle, right? Over here, right? Descending triangle and a break below. But of course, Bitcoin tricked everybody, and the the whales came in and pushed the price up higher, which Bitcoin likes to do. It likes to trick a lot of people, right? But we held out strong. We bought all the way down here. We didn't buy perfectly at the bottom, but you know, I said many times on the channel as we were coming down sideways that I bought within this range. You know, I also made a video telling you how to short in just in case Bitcoin broke below, but thankfully it didn't break below. I had some hedges on, which I actually was very lucky, and I got out right before Elon Musk went on the podcast with Kathy Wood and Jack Dorsey and ignited this incredible rally, right? So right now we're in this nice rally, and Bitcoin, of course, like I said, we did break 50,000, although we are experiencing a bit of a pullback, which is really not that surprising since 50,000 we talked about how it is strong resistance level, right? But 50,000 at this level right here, we stayed above 50,000 for a couple hours, but of course we're having a minor pullback right now. But I'm not too worried about this because this type of price action, we see this happen every time we've had new moves up to new levels, right? We kind of move up, we have an impulse move up, then we move sideways, consolidate, impulse to move up, and we consolidate for a while, you know? And we're seeing similar price action right now in that we have these kind of like sudden dumps, right? And what's happening right here is you have the smart money coming in, the whales, right? They're basically pushing the price down, trying to liquidate leverage traders, right? So there's two ways. That's one way. Another way is people who trade, they tend to set stop losses to minimize their potential losses. And these whales, they can see your stop loss, right? They can see it in the order book. And so what they do is they try to short the price and to trigger these stop losses, push the price down, and then meanwhile they're picking up spot positions and leverage long positions and riding the recovery back up, right? And this is exactly what we saw here. We saw a huge push down, and then of course a quick recovery, and a push down here, and then a quick swift recovery. So I think what we're seeing is basically just shenanigans between the whales and the smart money and the dumb money, basically. But I do see this thing going sideways, pushing around before we continue up higher, because 58,000 I said is a strong psychological number, right? But I also said that if we do hold 50,000 and push up above, I do think a swift move higher into our previous all-time high around 65,000, right? Set back in April of this year is on the table. So yeah, so and just going back in our last video, I talked about how there were two important levels that I want to see us hold as support, right? We had, of course, I just talked about the blue line, which is the 200-day simple moving average. I talked about how in a previous bull cycle, how we always stayed above in a bull market. So the fact that we basically came up, found resistance, but we held it so far. So as long as we stay above this blue line, but not only that, this Fibonacci line, see this line that's red? We need to hold this level because previously, earlier this year, we held as support here, but we finally broke it over here, and so we basically plunged all the way down to our next Fibonacci support level, right, within this channel. But now that we're trying to break above into a new channel, right, I said that we were going to have strong resistance here for two reasons. First is the 200-day simple moving average, this blue line, but also this this red line, which is our Fibonacci resistance level, which we created because we failed to hold support, right? When we broke down, we basically turned our previous support now into resistance over here, right? And I said that in our previous video, I said that I expected Bitcoin to go sideways for a while, consolidating, slowly absorbing supply before going a lot higher. So the fact that we actually broke above, we've actually broken above a lot sooner than I expected, and so I'm not surprised that we're having a bit of a pullback right now below 50,000. Even though we did touch and stayed above 50,000 for a couple hours, but I can see us kind of like going sideways a little bit more before making next impulse move higher, right? But I think what Bitcoin is trying to do right now is it's trying to validate and see if we can actually hold these support levels, right? And we want to flip this resistance into support by perhaps testing a couple times, and if we can hold it, then we can form a strong base that can continue to give bulls more confidence to push the price higher. And let's look at the moving averages, right? Moving averages right now, we have a crossover here, and this is important because this is our 50-day. The silver line is our 50-day moving average, and the gold line is our 100-day moving average. And in a bull run, like we saw from October of last year to April this year, we generally want to see our short-term moving average, our 50-day moving average, this silver line above the gold line, which is our 100-day moving average, and this gold line above the 200-day moving average, right? We want to see the short-term, mid-term, and long-term averages stacked on top of each other. This is suggestive of a strong uptrend. What happens is when they cross into a downtrend and signaling a bearish downtrend, is we see the opposite, right? We see the long-term moving averages on top of the midterm and on top of the short-term moving averages. So we see a blue, silver, and blue on top of gold, and gold on top of silver, which is what we saw here, right? So every time we had a bearish cross, like over here, we saw the price of Bitcoin basically go down. And of course, another cross here, this was known as the death cross that we had in June, right? And of course, Bitcoin plunged and came down lower. And then we had a bear trap over here, which tricked a lot of people, and we basically recovered very quickly. And so right now we have a bullish cross over here, but this is great, and this will probably give more conviction to the bulls to continue buying and pushing the price up higher. But what we want to see is what's known as a golden cross, right? When we had a 50-day crossing the 200-day, we had a death cross over here. But the next big cross we want to see is what we call the golden cross, which is the silver line, the 50-day moving average crossing above this blue line over here. And when it does, and it might happen sometime, of course, confluence, right, of different indicators when it meets the Fibonacci line. Who knows? I love it when all these indicators come together, right? It just gives me more conviction that a certain direction might take hold as the price action develops going forward. But yeah, so as long as Bitcoin continues to make moves higher, these moving averages will continue to cross in a more bullish posture. And what I want to see, at least in the short to midterm, is for us to at least the bare minimum hold the blue line, the 200-day moving average, and also hold this Fibonacci support area at 47,000. So as long as Bitcoin continues to put pressure to the upside and basically like we saw here, right? Continue to move sideways and absorb supply and put pressure on the bears to push up higher, right? I think that we can continue to see Bitcoin go up a lot higher. But we, at the very minimum, want to hold these two resistance level, right? The 200-day simple moving average, the blue line, and also this Fibonacci support level. We want to flip these into support from resistance at around 47,000. So definitely want to see Bitcoin continue to push up above 50,000 for me to continue to be even more bullish than I already am. Let's look at the MACD. MACD right now, we're starting to see the histogram kind of go down. So we're starting to lose a little bit of momentum, but the lines are still moving in an upward direction. So what we want to see is more histograms, green histograms being printed, and the lines together moving up higher, right? We already broke this downtrend that we had that led to a bearish divergence, which predicted the crash of 55%, and we broke above it. So we want to see more momentum going up to the upside, right? Sort of like we saw here. Strong movement up and strong, like increasingly larger and darker green histogram bars print, right? Suggesting bullish momentum, buying momentum from the bulls, right? Also, RSI is starting to see a bit of a bearish divergence, with the RSI kind of losing momentum a little bit, suggesting that some of the buying momentum is starting to fade even as the price goes higher. And a lot of this has to do with the volume. You see the volume kind of declining. We want to see the volume continue to increase as the price goes up higher, and that's going to give us more conviction, more of a signal that this is more of a validation that this is a strong bullish uptrend rather than distribution, right? We want to see the volume pick up as the price continues up higher, right? And that would also pick up the oscillators as well, giving us more a signal that we are in a more bullish uptrend. So as we continue to recover to all-time highs. previous all-time highs, right? So talking about the weekly close, we had another green weekly close, which gives us 5 green weekly closes in a row. Let's look at a clean chart. So yeah, so right now we have 5 green weekly closes in a row. So the fact that we're seeing a bit of weakness in the beginning of this week, it's not a surprise. We might, as you can see, these bars don't just like open and then just continue up higher, right? So we have some wicks, which basically suggests that Bitcoin did, when it opened the new week, it does come down. It generally does come down a little bit before going up and closing up a lot higher. So I do expect this candle to come down, maybe come down to 47,000 and create a new wick as we hopefully continue to close more green weekly candles in a row. And by the way, in a strong bullish uptrend, it's not out of the picture that we have a lot of green weekly candles in a row. So don't be like a little nervous about that. We do continue to see more strength to the upside, but of course, generally speaking, these candles don't just go straight up on the previous close, right? We do tend to revisit at least part of the body of the previous candle during our pullbacks. So I can see Bitcoin, like I said, it does seem like the body is going to be around this 47,000. So this is going to give us an opportunity to see if Bitcoin, if it does pull back, as I predict, if we can hold this level. And if we can hold this level and continue higher, I think we can say for certain that 47,000, this Fibonacci level is going to be support and not resistance anymore. What I don't want to see is I don't want to see us close below this level and basically flip it to resistance again, and especially below the 200-day moving average, right? Because we spent so much work trying to flip this resistance into support by coming down, testing, sometimes even closing below it. So if we do close below these two levels, I think it's going to be a lot more bearish, right? Especially if we continue to go down lower and break below 40,000, then that's going to be very, very bearish. But for now, as long as we stay above these two strong support levels, I will have more conviction, and I'm going to give more benefit of doubt to the bulls. That's what I'm saying, and I will continue to add conservatively to my positions on every pullback. I already added a lot down here, so I pretty much have a full position size. But whenever I have money coming in, then I'll continue to add a little bit more on any pullbacks that I can find. But for now, I'm very bullish on Bitcoin in all time frames, right? And the monthly candle looking very good. I mean, if we look at the last 10 years, right, Bitcoin generally is in an uptrend. And right now, this bullish candle, this monthly candle looks very good. It looks like it wants to continue up higher, and hopefully we can close the month, which is going to close in a couple of days, maybe just a week, a little over a week, and we can continue to print more green candles, right? Because I said in previous videos that in a strong bullish year, there's more green candles, right? 2013 and 2017 than there are red candles. Right, this is the bear market, 2018 and 2014. So we already had 3 consecutive red candles this year. We don't want to see any more. I do want to just continue to print green candles, and that's going to signal that we have a similar trend as 2017 and 2013. Especially 2013, people are talking about how we might have a double top, right? Where we had a mid-cycle top correct and then a mid-cycle correction and then a final top at the end of the year. So I think that's likely what's going to happen. We had a mid-cycle correction and then a 55% and then higher final top by the end of this year. That's my prediction at least. But of course, we're going to have to look at the price action and see how that develops going forward. So yeah, now that we've looked at the technical analysis, let's look at some more fundamental stuff like hash rate starting to recover, or it's not starting to. It has been recovering for a while now, but it continues to find support and continue up higher. And what we want to see is for the hash rate to continue even higher to previous all-time high and surpass it, right? Right, we talked about this in previous videos, how hash rate and the price of Bitcoin has a strong correlation, right? April 14th was the peak all-time high for the hash rate. Also, April 14th was the all-time high, right? Just below $65,000, right? And when hash rate fell because of China basically cracking down on miners, we saw the price of Bitcoin fall as well. But now that miners are setting up shop again, we're starting to see the price of Bitcoin recover as well. And as the miners basically relocate to other countries and begin operations again, and yeah, so the hash rate is starting to recover. Bitcoin is going to be even more secure, and we should see the price of Bitcoin continue higher as the hash rate recovers as well. Fear Greed Index in greed now, which is actually a good thing because we had this nice recovery. Because in a bear market, we tend to see the Fear and Greed Index remain at these very low levels, right? Whereas in a bull market, a strong bull market, like we had in October last year to now, we tend to see the fear and greed index at higher elevated levels. So the fact that we're going a lot higher now, and also a lot higher than we were in 2018 bear market, right? To me, it gives me more confidence that we're not in a bull trap that will continue down lower into a bear market, that we're actually in a actual bull market that will continue up higher. So as long as the fear index continues to trend higher, that just suggests that people are more confident, that they're more bullish, that the price will continue up higher. Now let's look at our indicators, that these charts that we've been looking at in our previous videos, and see how they have changed and updated. So our 2-year multiplier, we continue. By the way, the 2-year multiplier basically says that when the price goes below this green area and it becomes shaded, that's generally a good area to buy. And of course, when it goes above the red area, it becomes shaded, that's generally a good area to sell. And in between is pretty neutral, right? So the fact that we come down and we're basically, it looks very similar to what we had in 2017 and 2013, where we kind of we reached the top and then we kind of like pull back a little bit. Of course, this is a lot more dramatic. This is kind of like, it's kind of like a combination of this one and this one. Because in 2013, when Bitcoin was smaller market cap, more volatile, and price movements were more extreme, right? Right now, the market cap is a lot higher. There's more participants, so the price movement is probably not going to be as extreme in terms of percentage moves. But I do think that what we're seeing right now is sort of a combination of 2013 and 2017 bull market, in which we hit this upper band and we pulled back, but we pulled back a lot more extreme than we did in 2017. 2017, our worst correction, I think, was like 40 something percent. This is a 55% correction, right? And in 2013, this correction from the peak of April, which coincidentally is also where we peaked in April this year, right? This correction was 80%. So what we had is 55% this year. So it's sort of a combination of this, where we touched the upper boundary, didn't overshoot it, but we did correct a lot more than we did in 2017. We corrected like we did in 2013, significantly, like over 50%, right? But now that we're seeing the price of Bitcoin recover, not only that, but as we start to see the price of Bitcoin recover, the upper boundary is going to go up a lot higher. And historically, in our past 2 bull cycles, when we had the peak, we saw the price of Bitcoin go above, overshoot, right, before it became overbought. So the fact that the upper boundary is at over 100,000, it gives me more confidence that Bitcoin will not only hit 100,000 by the end of this year, but surpass it, maybe 200,000 or 300,000. But of course, we're going to have to wait until then to give you a more precise price at which we could get a potential exit signal from this indicator, right? Telling us that it's overbought and it's time to leave, like we did in late 2013 and 2017, and wait for the bear market and to buy a buying opportunity later on in the next 2 to 3 years. Pi cycle top indicator, right? Perfectly called the top of this mid-cycle correction. And I'll definitely be using this indicator as a potential exit signal, because it has proven itself right this year. And yeah, it's in the past, it's done very well in terms of signaling exit signals. But this indicator was created in April 2019, right? After these crosses already happened. So the fact that it can actually predict the future now, like we saw in April of this year, I'm going to be relying on the Pi cycle top indicator to give me a more precise exit signal as compared to other indicators like this one, which is more general, shaded area. This one gives you a much more precise, within 3 days of crossing. So Pi cycle top indicator right now, like I said, there's 2 things to look for, right? First is that in a true bear market, this will cross. It usually crosses above the orange line, and faking people out, thinking that, oh, it's time to buy back in, but then it crosses below and it enters the bear market. Same thing in 2018, right? Crosses above the orange line, but then crosses below and then continues down lower. But generally speaking, when the price of Bitcoin crosses above the orange and it continues up higher, there's a high probability that Bitcoin will continue up to run higher up into and continue its bull market. So if we look at the price of Bitcoin, we are above this orange line right now, but we want to see it stay above and continue higher. If we see this roll over and continue down lower, which is right now at around $40,000, this is just below $40,000. If we see Bitcoin come down below 40,000, it's going to close below orange line. And historically, when that happens, Bitcoin tends to continue down lower into a bear market. So as long as the Pi cycle top indicator is telling us that the price of Bitcoin remains above this orange line and continues higher, 2 things. First is that the higher the probability of Bitcoin continuing higher, but also the higher the probability that Bitcoin this indicator will signal a exit signal, right? Because right now, if you look at the bands, right, the orange and the green bands, they're very wide apart, which means Bitcoin needs to move very quickly, and almost like violently to the top before these bands will cross and signal an exit signal, right? So there's still a lot of upside based on this indicator, that Bitcoin can go up a lot higher before this cross, and it's signals an overbought signal telling us to sell. So this can cross well above 100,000, right? I mean, this upper boundary. By the time it reaches the green level, by the time the price of Bitcoin reaches the green band, it'll probably be around 100,000s, and that's not even close to when it's going to cross. So when it crosses, it can be a lot higher. So potentially in a higher exit signal than many people may expect. Pull-out multiplier, of course, gives us an exit signal when the red line hits the shaded area, telling us that the price of Bitcoin is overbought. We haven't even touched the shaded area yet, right? This looks a lot like a mid-cycle correction that we had in 2017, right? Where we kind of pulled back. Although this pullback was a lot more extreme because of the China cracking down on miners, and the global redistribution of the hash rate. So still signaling more a mid-cycle correction than a bull market top, right? Leading into a bear market. Golden ratio multiplier, of course, we talked about how this looks a lot like sort of a combination of 2017 and 2013, where we hit the purple line and we had resistance instantly. We had some corrections, but this correction was much more severe than any correction that we had in 2017. In fact, it's more in lieu of, or not in lieu, it's sort of like, kind of like, looks like 2013, where we had this massive correction, right? Although this one was a little bit worse. We touched the orange line, in which we didn't touch the orange line in the previous ones. But at the same time, the price of Bitcoin didn't go high enough to cause a dotted print yet, right? Whereas right now, Bitcoin, like I said, when Bitcoin had a lower market cap, when there's less participants, the moves were a lot more violent, right? A lot bigger. But right now, Bitcoin is there's more participants, so it takes a lot more money to move the price of Bitcoin, right? Even though Bitcoin is still pretty volatile, it's not as volatile as it was in 2013, and I know that because I was trading Bitcoin in 2013. So, yeah, 2017, of course, had a nice print up here, signaling the top. We haven't had a big enough movement to break above the orange line, sorry, the purple line, to cause a print, right? So that's another thing that's very bullish, is that as Bitcoin continues to recover and break above these bands, the higher upper band, the purple line, continues to go up a lot higher, giving us a lot higher ceiling at which Bitcoin can peak, right? Not only breaking above the purple line, sorry, but also peaking above and printing a dotted line, giving us a potential higher exit signal well above 100,000. So very bullish. This looks, of course, like I've said in my previous indicators, it looks very much like a mid-cycle correction rather a top. And but also we want to look at the potential downsides, right? Bitcoin is in a bear market, and if we cross below this orange line and continue down lower, right, like we saw in 2014 and 2018. So if Bitcoin does, we did sort of dip below. Oh, get a better zoom in. Bitcoin did dip below a little bit, but it quickly recovered. So if we see Bitcoin come down again and dip below this orange line, then Bitcoin, the higher the probability of Bitcoin in a bear market, right? But as long as we see the price of Bitcoin continue up higher, I can see the potential overbought signal, exit signal, a lot higher than 100,000, well above 100,000. Z-score, of course, signaling an exit signal, overbought signal when the red line spikes above this shaded red line or shaded red area, right? We haven't even broken above the shaded area, so still looking like a mid-cycle correction, right? Yeah, everything looks very oversold, and looks like we're about to see an epic rally, right? Like an epic bounce higher, and yeah. And this is something that we haven't looked at, but I thought it would be interesting to look at the logarithmic growth curve, which tends to give us a pretty good indicator of which Bitcoin can potentially peak in the future. And what this is basically telling us is that Bitcoin generally, every cycle, the returns gets less and less, even as it goes higher. Like the returns in 2013, from the bottom to the top, percentage-wise, it was a lot higher than 2017, and generally you can expect the same thing to happen this year. The percentage returns for the potential top is going to probably be a lot less, right? As the market cap gets bigger, there's more participants. It just takes a lot more money to move the market. So the good news is that this potential top may happen and well above 100,000. So there's still a lot of upside left, right? And we look down below here. Bitcoin tends to this indicator tends to signal an exit signal when the red line touches the top line here, right? This upper boundary, and we're nowhere near that, right? Exit signal here, exit signal here, exit signal here, right? This is 2011, 2013, and of course 2017. And Bitcoin, we haven't seen this red line spike above, giving us a overbought signal, an exit signal. In fact, this looks more like we had in 2017 over here, or even 2013, which is a mid-cycle correction, right? And so plenty of upside based on these indicators and all the previous indicators I talked about. Last one, talk about stock to flow. Of course, stock to flow tells us that the price of Bitcoin should, on average, be where the red line is. Bitcoin tends to, in a bull market, Bitcoin tends to overshoot the red line, and in a bear market, it tends to overshoot below, right? So in a bull market, it overshoots above, in a bear market, it overshoots below, and over time, it tends to stabilize around this red line before moving up higher. So right now, we haven't even broke above the red line right? And what we've seen compared to the last cycle is that we've actually gone up a lot faster. You see how the price of Bitcoin went above this red line over here, whereas in our previous cycle in 2017, we didn't get above this red line until later this year in the fall. So I think that part of the reason why Bitcoin corrected so hard is that we went up a little too fast, and we had this epic correction, 55%. But I think Bitcoin is about to make an epic rally and likely overshoot this red line like we have the past 2 to 3 cycles, right? 2013, 2017, 2011, 2013, and 2017. So, and right now 2021, right? And yeah, so if we do see an overshoot, like in comparatively similar to the last couple cycles, we may see Bitcoin shoot up to 2 to 300,000 based on this chart alone. And of course, the deviation from the price where it should be, this red line, is basically what this line graph that we're looking at right now. Of course, we talked about this in previous videos, how when we had our mid-cycle correction down to July, we actually had a very similar deviation variance from the graph in 2017, right, where we had the price come down, or the variance come down to negative 0.97. Over here is negative 0.99. So just down to the negative 0.9 range, right? And not only that, but also similar month, right? July here in 2017 and also July in 2021. So we're seeing very similar behavior in the indicator in the models, which is giving me more conviction that Bitcoin is likely in a mid-cycle correction rather than a bear market, and that we will likely continue up higher. And yeah. So just to summarize, overall, I am very bullish on Bitcoin, even though I do see that Bitcoin will likely continue sideways for a while. Because, of course, 50,000, just to summarize, 50,000 is a strong resistance level. I do expect Bitcoin to have challenge breaking through, but I think when Bitcoin breaks through 50,000, I think there's going to be a lot of confidence, and people are going to want to buy and push up the price higher. And our next resistance level is going to be this Fibonacci resistance level around $65,000, which is coincidentally our previous all-time high, right? But at the bare minimum, I want to see Bitcoin hold the 200-day moving average, which is this blue line, and also this Fibonacci support line. So if we do come down, I do want to see us hold this as support level. If we don't hold that support level, we will likely come down, continue down lower, and that's going to be really bad. I don't want to see that at all. I want to see us hold that level, flip it, confirm it to support instead of resistance, flip it from resistance to support, and then continue up higher, right? That's what I want to see. Bitcoin. I just want to finish off lastly with a potential bearish scenario, right? Right now, I'm very bullish on Bitcoin, but it's important to look at all possible scenarios so you're not too biased and you're ready to take action in case the price goes the opposite direction, right? And you don't lose too much money. So, of course, in my Twitter, I posted this in June, how Bitcoin tends to, when it hits the 50 weekly, this is a weekly chart, right? The 50 weekly line, the silver line, it tends to have a strong bounce, but in a bear market, right, it tends to close below. Once it closes below, it tends to go down lower. And yeah, same thing in 2017. So this was a 2014 bear market. This is the 2018 bear market. Bitcoin came down, touched the silver line, bounced. I mean, this is a strong bounce. This is 50% bounce over 5 weeks, right? And then eventually the momentum stopped, and it came down and broke below the silver line, and it continued down into a bear market, right? And right now, we're seeing something very similar. We're seeing a strong bounce off the silver line after touching it. And of course, this was in June, so we want to look at an updated chart, which is now. So since then, we've had a strong bounce, right? We had 5 weekly green candles in a row. But like I said earlier in this video, I was saying how the volume is starting to come down a little bit as in the oscillators. It's just showing that we need a lot more volume to come in. We need more buyers coming in to push the price up higher, right? Even now, we're starting to see the price kind of fade a little bit from 50,000. But we definitely don't want to see this thing roll over, and especially break below this line, because as the weeks develop forward, the silver line is going to continue higher, right? We don't want to see the price of Bitcoin break below this line, because like we had in the previous two bear markets in 2014 and 2018, we saw the silver line not hold as support, and eventually Bitcoin broke into a multi-year bear market. So if that were to happen, then that is one potential bear scenario. So even though I'm bullish on Bitcoin, I think the probability of us going a lot higher is a lot higher than us going into a bear market. But this is just something we need to look out for, because we can't just be blindly bullish. You know, as much as we all want to make money on the upside, that is still a possibility that could happen. We already have 5 weekly green candles, and we had 5 weekly green candles here before the momentum faded and moved down, right? So I think it's really important that if we do close this week red, that the next week continues up higher, right? Because if we close this week red, I think that the bears are going to get a lot more confident in trying to attack Bitcoin by shorting it aggressively. So we definitely want to see the bulls step in, and we want to see more volume coming in on the daily chart. And that's going to also give us, the oscillators, more momentum to the upside. So just to summarize, again, I want us to hold the 200-day moving average to the Fibonacci support level over here at 47,000, and hopefully keep attacking 50,000. You know, take some more supply off the market before pushing up higher to and retesting our previous all-time high around $65,000. And definitely don't want to see this thing roll over, right? Continue to move sideways, absorb supply. Overall, I am bullish on Bitcoin, and I expect Bitcoin to continue higher, well beyond 100,000. We just went through a bunch of indicators talking about how it does seem like we are more in a mid-cycle correction than we are in a bear market. And I do expect Bitcoin to continue higher, especially as the hash rate continues to recover. But we definitely will need to update you based on the price action going forward to see if all of what I went through is validated or invalidated, and if Bitcoin will continue down lower. But I do think that the probability at this moment is more in the bulls' favor. So I will continue to give benefit of doubt to the bulls as long as we continue to defend these support levels. I do think that the probability of Bitcoin going up a lot higher to previous all-time high is a lot higher now than it was, of course, a couple weeks ago. So, of course, I'm going to have to update you on the price action going forward, and I'll definitely do that in the next coming weeks. Thank you for watching this video. If you found it useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you, and have a great day.